Good morning again, everyone. Since we have been introduced by the lovely MC, so I'll skip the introduction part. So again, I'm very pleased to serve as the moderator of today's panel on global outlook on virtual assets. As we navigate through an era of rapid technological change, the financial landscape is evolving in ways that are both very exciting and challenging. So virtual assets, stablecoins, blockchain technology, and decentralized finance are at the front of this transformation. So I will raise a few questions for each panel, and after that, these general questions, I'll leave some time, open floor to the audience. So since Mr. Kito-san and I have introduced our regulatory regimes in each markets, so my first question will be still on the regulatory harmonization. I would like to ask our panelists, could you share with us the main characteristics of virtual assets regulation in your jurisdictions, or share with us your observation on the global trend on the supervision around the globe? In addition, I'm curious that how realistic is that? Can we achieve a harmonized global regulatory framework in the near future? Or what are the major risks associated with the continual regulatory fragmentation? So, Carl, would you like to take the first question?
I didn't know I was going to be the first one, but anyway, thank you, and it's wonderful to be here. I'm not going to talk about the jurisdictional issues as the other countries are, but the first thing, it's amazing to see the progress that Taiwan has made over the years. I mean, I started talking to FSC about blockchain in 2016 and tried to do CBDC pilots as we did in Singapore, Hong Kong, and Thailand, and it's great to see how much progress has happened over the last 3 or 4 years, so it's fantastic. But so, I mean, I think for me, the real challenge, and this I've seen in blockchain, I was doing it for about 7, 8 years, is the harmonization, right? Because every country has their own challenges of data privacy, they're going to have a security, and different standards, and that's always going to be a challenge. I mean, I remember the ASEAN, there's an APEC paperless trading forum in 2003 that was going to be finished by 2005, 2007, 2010, and the countries couldn't all decide how to digitize their documents in the same order. Now again, that was a technical issue. Now we have, I mean, digitalization is much easier. I think the understanding, I think that the discussions among countries are a lot more prevalent and a lot more open. But I think the challenges will be, you know, how can anyone decide what the standard is going to be, and whether that's, we have the challenges of China, of US, of Europe, you know, and then Taiwan always has the challenges of being a little bit unique in their diplomatic status as well. So I think for Taiwan it's sort of a unique challenge. I think it's getting closer. I think the discussions, and this type of discussion is a great opportunity to understand the other jurisdictions and their mindset. But I think everyone's going to have to give in a little bit, and no one's going to be able to stand strong on their own. This is the only way we're going to do it, because when you get to virtual assets, when you get to, it's a global, it becomes a global asset, right? And so the minute it becomes a global asset, you have to think about how to manage it and manage liquidity, security globally, and make sure it doesn't hurt yourself and it's also fair to others.
Thank you, Carl. You mentioned about the mindset. Yes, we are facing different animals, if I can say so. They are different from the existing financial institutions. And even for regulator, we have to have a different mindset to regulate this industry. So same question goes to Ms. Packin.
So first of all, it's great being here, and thank you very much for organizing this terrific day with so many amazing speakers to learn from. So with regard to the question, in Israel, the ecosystem is very interesting because on the one hand, Israel has been known to be the startup nation, and there's a lot of R&D and development and interest to be early adopters with anything related to technology, in particular fintech. There's tons of VC activity, startups, even in the university. We have multiple mentorship programs going on for groups of students that are working on different types of projects in various stages, in different types of services and products relating to virtual assets. And then there's reality, which is a little bit different from the market expectations and the interest, which is that the regulators are very conservative for various reasons. And it has been expressed by the private sector many times in the last decade and a half that this very conservative approach to virtual assets, to the blockchain technology in general, to the adoption, to the regulatory situation is in complete contrast with the activity that we see. And there are various reasons for that. The main one is anti-money laundering related activities. The second one is just regulatory caution, which in many ways has proved itself in the 2008 financial crisis and kind of spared the economy. It's a smaller economy. There's a lot of interest in sort of maintaining a stronger grip and being more conservative. But this dissonance is very apparent, and it's something that is being discussed all the time. In terms of regulation, there isn't really anything uniquely, so going back to your slide, to regulate or not to regulate, the approach so far has sort of been to ask a lot of questions, hold a lot of roundtables, solicit a lot of comment from the academia, the private sector, but not to regulate so much. So the main regulatory pieces that we work with are licensing requirements, which if you offer any type of services, you have to be licensed. Anti-money laundering, going back to FATF and some of the issues that were discussed, and this regulatory agency is actually very, very powerful and active in Israel. And of course, the tax authority, which treats virtual assets as assets, and that's something that has been in place, but there are also all sorts of initiatives around that, encouraging disclosure and all sorts of related attempts to kind of create more disclosure among the public. And going back to your question about harmonizing versus fragmentation, of course, this results in a challenge in terms of harmonizing because, while we do have the Common Core, the anti-money laundering and that type of stuff going on, in the absence of additional or specifically tailored regulation, it is hard to harmonize. And of course, this causes some issues such as regulatory arbitrage, what the industry has been warning about, which is the risk of innovation sort of slipping and kind of making its way to other jurisdictions. And of course, in all fairness, everyone is sort of aware of the fact that there is a large segment of the population that is using virtual assets and just doing it under the radar. And so, there's that as well, of course. So in an ideal world, much more, harmonizing. In reality, it's a little bit challenging given all of this.
Thank you, Ms. Packin. Certainly, I think the regulators need to work with other regulators across the globe. For example, the implementation of travel rules is very important to combat the AML. So we're looking forward to further cooperation with other jurisdictions. So same question goes to Alexander. You are from the industry, so you're familiar with the operation of the virtual assets. So what is your expectation for the regulators in addition to provide a more legal clarity and do you have other expectations for regulators?
Yeah, sure. Well, I guess first of all, thanks for having me here. It's great to be in Taiwan. And some context, so Coinstash is a regulated digital currency exchange out of Australia. 50,000 registered users and over 2 billion is traded through it. I guess for us in the Australian market, what's been different is we've been largely just been governed by AUSTRAC, which covers AML sort of regulation. But last month we had the Department of Treasury, along with ASIC, really release some fundamental changes to regulation to actually bring exchanges like ours, custody providers, brokers, really under the umbrella of, I guess, really financial services license supervision. And I think it's a real game changer, and for us, we're really supportive of that move. And I guess, but what's interesting is we're not creating in the Australian market a separate digital asset license. What they're actually trying to do is, how do you fold those services into the existing financial services regime? So you're still going to have things like dispute resolution, fair conduct, fair pricing, disclosure. But there will be some other areas like custody, which the regulator is laser-like focused on, because to date, there's been billions of dollars worth of digital assets under custody with not a clear set of minimum standards. And I think, you know, we welcome the change that ASIC and Department of Treasury are at least proposing, and we think it will come into effect in the next sort of 6 to 9 months. Because I think the areas around, we've talked about custody, the other element that they're trying to do is, how do we move away from one-size-fits-all disclosure? So you actually have tailored platform disclosures. So this covers around pricing, how the actual different platform operators operate, because everyone knows there are nuances between how different exchanges, brokers, intermediaries work. And also, I think the other bit that the Australian regulator has tried to put out in its reforms is to try and be, I guess, more tech neutral. So they're saying that the technology is going to evolve over time, so let's try and regulate the activity in front of us. So it's kind of on the principle base of regulating the activity, so same activity, same risk, same regulation. And I guess probably one of the other big reforms is around stablecoins. And so if you're an AUD stablecoin issuer, effectively it's called tokenized money or a stored value facility. And what's interesting is you will need a license under the payment reforms, but if you reach systemic scale, you will be governed by the prudential regulator, so APRA, which typically governs banks and insurers. And I think, you know, at Coinstash we welcome kind of that move towards coming more a licensing environment, because I think no one wants to operate in this grey zone, and we are really supportive of more institutional players coming in, because it's going to lift the standard. To the earlier point that you touched on around sort of the harmonisation, my own view is it's going to be very hard to get a single unified rule book. But I think we're getting a clear convergence around topics around client asset segregation. We're starting to have good conversations around digital asset insurance, around security. And so I think those kind of clear convergence of terminology or principles will lay the, I guess, the foundation for further reforms for each jurisdiction. But we're still going to deal with jurisdictional nuances. Yeah.
Thank you, Alexander. It seems that the more engagements between the regulators and the different related parties, such as from industry, from academic, and from the commerce and various parties, is very important. So it may be a long way to go still. So, Mr. Kito, do you have anything you want to add on the regulatory issues?
Regulatory issues, yeah. So as I shared, we have many kinds of regulations already in place. But yeah, I might say that we still have some the challenges in the regulatory spaces, because after stablecoin regulation, we have some other new regulatory challenges, such as, for example, yield-bearing stablecoin, for example. So if it's tagged pegged to the fiat currency, how the issuers can have a more fiat currencies which can back their yields newly generated. So this kind of regulatory frameworks are also needed. Yeah.
Thank you, Kito-san. So I think another question very highly related to supervision is the application of the crypto assets. So there are different roles in comparing to traditional markets. If it is positioned as payment, as utility token, or as just for pure transaction purpose, then we'll have different regulatory requirements on this different application. So my second round of questions is on the application of the virtual assets or stablecoins. Because according to the Genius Act and the regulation in some countries, stablecoins are mainly defined as payment or clearing stablecoins. But it seems that the major application of stablecoin right now is still transaction purpose to conduct the assets on the other virtual assets in settlement payment tool. We rarely see people in States or EU using the stablecoin to pay for coffee in a Starbucks. But however, stablecoins are used as payment in some high inflation countries, such as Argentina or other countries. It is also used as a tool to hedge the FX risks. And we know even in Taiwan, some companies have accepted stablecoins as a payment for international trade. So my question is, what is your prediction of the future use cases or application for virtual assets or stablecoins? Same, first one goes to Mr. Wegner.
Yeah, it's a great question, and this almost goes back to the world of Bitcoin, right? Bitcoin was supposed to solve everything. It was supposed to be democratize money, and everyone was going to have a Bitcoin account, and Bitcoin payments were going to be cheaper, faster than everyone else, and actually not, right? Bitcoin proved that decentralized consensus worked to exchange value from one person to another without a central authority. So it was a good test case, but it wasn't really used for all these promises. Stablecoin, I think, has a lot more potential, but stablecoin is it's the same challenge, and you're just saying it, right? If you're in a stablecoin works in its own ecosystem, and it's only as good as the ecosystem it can create. And if you can't pay for coffee on with a stable coin, again, it's used for virtual, it's used by the crypto world for exchanging cryptocurrencies as a base. It doesn't touch real world assets that often, or, and again, if you have to change to fiat currency, then sort of what's the point, right? You're going into fiat currency, well, then you might as well stay in fiat currency. So again, the challenge is going to be how to build a ecosystem that links to whatever stable coin it is, and how do you have backing, how do you have, and I've seen this in Bitcoin in Japan many years ago. One of the big exchanges, they promised to keep, they went to all the merchants and said, you can use Bitcoin and accept it for payment, and we promise to hold, no matter what Bitcoin goes up and down, we promise to keep that FX rate the same as when it happened. So even if it goes down overnight 20%, we promise that you're not going to lose your margin. Right? So someone probably big, and whether it's a government or a big exchange, is probably going to have to figure out how to build a ecosystem. And maybe it's by industry. It could be by industry. I mean, it could be just domestic. It could be by a certain industry where that stablecoin, that token, that medium of exchange is used within that industry. And maybe it's going to take a long time to get to Starbucks. Or maybe it's just a Starbucks stablecoin.
Thank you. And Nizan.
So actually a month ago, I was at the Boston FinTech Week, and which was taking place in the Federal Reserve in Boston. And they dedicated an entire half day to stable coins, because I think there's a lot of excitement right now about what could be the use cases and the possibilities, and potentially there are a lot of different options, whether it's better cross-border payments, faster, quicker, whether it's even payroll, certainly in like a gig economy world where you have different people that could benefit from that type of an opportunity. All sorts of bridge-related functions between, TradFi and, Web 3.0 projects and opportunities. And of course, all sorts of other different things in the pipeline relating to corporate treasury and management and supply chain. But I think, and this is something that the Israeli securities agency is actually dealing with right now. They just published a call for comment that in order to successfully actually use stablecoins for any of these use cases, certain things need to be addressed. And so in particular, in the Israeli call for comment, issues relating to run on the bank type of situations and redemption concerns must be addressed. Issues relating to deposit replacements, because we are dealing with banks that would need to, cooperate in this potential system. And of course, we go back to anti-money laundering and crime prevention and fraud, and that's something that needs to be addressed as well. I think in the US in particular, seniorage and privatization issues are big as well. I personally think that, there could be a lot of, potential and promise with the use cases, but I definitely agree with the Israeli security agencies that in order to do so, we need to address these specific concerns, get some type of an understanding as to how auditing would work. And
Alexander?
Yeah, look, I guess we've been through this whole stablecoin summer. In Australia, we're seeing constantly stablecoin projects come to us and want to list. Currently, we've yet to list any AUD stablecoin projects. We'd love to. I guess what we're trying to see is what's the real use case here. There's limited trading pairs and yield compared to US dollar stablecoin counterparts, but we're hoping the regulation and the reforms around payment licensing, these projects might move beyond thinking about just trading pairs and yield to other things, right? So for me, I'm a big advocate of how businesses can use it for corporate treasuries, how it can be like a core settlement, layer for tokenization. I think even, you touched on it earlier, even for the retail side, how it can be sort of embedded in financial applications and can be used for subscriptions that are automated through blockchain logic. So there's a lot of use cases. I think it's trying to grow the adoption and the thinking beyond how it's traditionally evolved from. And I think the take-up rate will be hopefully greater than in, I guess, more advanced markets from a financial standpoint. And also just a shout out to an industry body, the Stablecoin Standard, that covers US dollar and non-US dollar stablecoins. And that's really trying to advocate for trying to create some, I guess, minimum standards that the issuers are trying to generate. And just last week at a State Street event in London, all the talk was about a new stable check, which is trying to improve the transparency by more like your stablecoin issuers globally. So feel free to check it out. But yeah, I think there's definitely a long way to go. I think they've got a role to play in the financial ecosystem.
Thank you. Mr. Kito?
So I expect two use cases. One is cross-border payment. Because in the domestic payment, we still have multiple and cheaper alternatives. And it's from the fintech perspective, it's really hard to make profits through domestic payment transactions. And in reality, that many of Japanese still using cash in the payment transaction. More than 50 or half of the transactions are still in cash. But on the cross-border side, there's still huge pain point. And we are still struggling with paying external entities and merchants. So this is one. And the second possible use case is DVP with security tokens. So actually I ran fintech companies years ago, and it was doing securitization, tokenization. And I also faced the pain points for the DVP. So payment towards the security tokens and the financial instruments. So two possible use cases, I think.
Thank you, Kito-san.
Yep.
So it seems that the crypto assets, including the stable coins, there will be more potential applications comparing to traditional financial markets. Last month, I met a representative from the EU. He's the legal consultant of the MiCA. He said that after the pass of the MiCA, the payment application in Euro is still a very early stage because you're using the credit card or debit card to do the consumption. It's very efficient right now. So what is the advantage of people using the stablecoin or other coins to make payment? It's still very challenging in mature markets. So let's lead us to our third question. I think many guests here today is from the traditional financial markets. So my third question is the impact on the TradeFi. So how does the rapid development of the virtual assets affect the participants and business model in traditional finance? What kind of attitude should they take to work with them, to join them, or to what is the pattern to stay in the same ecosystem, to work together, or should they just do their own business? So do you expect an increasing involvement of financial institutions, including asset managers, banks, or other players in this market in the future crypto asset ecosystem? If there is impact, in what way? So.
No, it's obviously it's a new tool, right? If we talk about stablecoins, blockchain, DVP, they're new tools that can be used. So a couple things is it going to be separate than traditional finance? No. The regulators are going to make sure that it's safe as traditional finance. Now, the challenge we have, and I think we sort of mentioned it, and the way I sort of say it, maybe it's not too proper to say it, but we have the challenge of the crypto boys and the crypto boys and girls and all the old bankers, right? And I've seen this from 2016 when I started, right? And again, from the crypto side, some people have become very rich because they happen to own crypto, but there hasn't been a crisis. They haven't seen a crisis like more mature bankers have. They haven't seen 2008. They haven't seen 1997. It's always been up. It's always good, right? And no one's really prepared for a crisis just yet. And so that's why the regulators have that role to make sure that they plan carefully and there's regulations and consumer protection and things like that. But there's definitely a role for, and financial institutions are looking into it, obviously. If it's another way to make more money, it's an opportunity. It's a way to be more efficient, yes. So something like DVP, as you mentioned, is really, really key. If you could, because most transactions are if-then transactions. If the invoice should be paid, it should be paid, right? And you can automate that. Should we be automating a lot of accounting, right? A lot of that can be done, and DVP, it's if-then statements, AI, however you want to say it, but it's a way of automating payments, automating decisions. A lot could be done that's now reconciliation could be a waste of time if you could put it on a equal ledger. So there's definitely things that can be done, but I think the challenge is, and even like cross-border payments, SWIFT is not actually slow. SWIFT it's not carrier pigeon. SWIFT is actually electronic. Payments move quickly, but what slows it down is AML, right? Money laundering, KYC, all these things, right? So even if you move it faster, if you don't take all those other considerations, now if you can automate that, then that's fantastic. But if you still have to do AML and all these challenges, the payment part is not the slow part. It's all the work to get to that payment. And again, if that can be automated, great. And maybe that's sort of a DVP type of smart contract potential.
So I very much agree with that. And I think we always have this tension of speed versus safety that must exist. I also agree with what you said in terms of the landscape changing. So it's not necessarily that the crypto funks are here to mess things up. Right now, there are a lot of stakeholders and parties that are interested in the technology, in potential use cases, because they're thinking, let's see how we can make more money. Can we earn better interest? Can we, put our funds into a better use? And so I think, in that sense, we do see a change because everyone is interested if they can reap some benefits. And we do see that translates into, the traditional ecosystem, traditional financial institutions playing along in various things, from Dubai enabling people to purchase real estate purely with stable coins, enabling a process that used to not be based on digital assets, now work through two different branches that are agencies that are kind of managing this successfully, to all sorts of other use cases and adoption throughout traditional finance. So I'm sure most of you have read in the last few days about what the media has classified as a fat finger mistake with PayPal. PayPal's partner, Paxos, essentially minting $300 trillion of stablecoin and having an oops moment and then quickly fixing it. So we are seeing that more and more players are getting involved, and of course this results in more potential errors. In the last several months, we've also seen parties like BlackRock enabling people to hand over Bitcoins into ETFs and in return get shares in the ETFs. Going back to your point about creating more risks in what we now are turning into traditional financial instruments and assets. So I'm sure, this requires more risk monitoring, and we don't want to see any black swans developing from these types of TradFi usages of the technology and the products and services. But of course, there's a lot of potential, and we just need to do a better, or continue doing a good job of sorting risks and implementing use cases in a successful, safe way.
Yeah, I don't disagree with any of the comments here. I think it's straddling that growth, but also compliance, which is my sweet spot, and it's always that challenge. I think we're seeing a real convergence between TradFi and digital assets. Even in the Australian context, having proposed reforms on the table has meant the conversations with institutional investors have changed. So we're seeing superannuation funds, family offices wanting to have active conversations. How do they engage and start playing in the sector? And I think that's happened as we touched on what BlackRock's done with ETFs. We've seen in Europe with MICA, authorising investment of firms to be able to deal with, allow you to deal digital assets directly. And I think we'll just constantly see this convergence here. I think the other piece is like where banks, fund managers can provide an active player. So are they going to be starting to do more around custody, settlement, being that tokenization services? And we are seeing that. I think we're seeing already the tier 1 banks looking at it, the tier 2 are going to start thinking around that. And because I think they also recognise how are they going to start accepting things like stablecoins, which are going to be issued by in many different countries that are privately issued. It's going to be a challenge for them. So I think, but it's going to lift the overall standard. So very supportive of TradFi getting involved, and I think it's just going to help the industry mature.
Yeah. So I also believe that TradFi should work closely with the fintechs and digital asset players. And yeah, as I explained, many of digital asset-related regulations are based on the existing laws and regulations. So that means there's many opportunities for TradFis to do more with fintechs and digital asset guys. And let me share some examples in Japan. So SBI is very proactively working with digital asset-related companies such as Circle. And also, SBI is the first one who received a stablecoin exchange license. And also, for the banks, some banks like MFG is working with JPFC for pilot and POC. So I believe more and more collaboration between fintechs, stablecoins, digital assets, and existing financial institutions.
Yep, thank you, Kito. So for domestic banks or other financial institutions, they are trying to embrace or at least get involved in the development of this very interesting area, including the virtual assets and DOT technology. So as Nizan, you mentioned, how do these banks balance the safety and risk or speed is a core issue for domestic financial institutions. So after 3 rounds of questions, do any panelists want to add more comments or response to the previous discussion?
Maybe I'll just briefly mention following up on the TradFi adopting. There are a lot of different possibilities, even beyond what we mentioned. So for example, talking about security and safety, as you just referenced, in the US, the clearinghouse created the clearinghouse token service in the last few days. It's been mentioned in the media, which is an attempt to use tokens to replace bank account numbers in order to enhance safety and security. And this is another good example of TradFi kind of trying to figure out ways in which we can really utilize the technology to create more safety and perhaps benefit from it. All sorts of different attempts are being made in the open banking initiatives around the world using tokens. So I think there are a lot of different options and possibilities, and I think it's exciting to see how different countries, different parties, different stakeholders are trying to put them into place and test them out.
Thank you, Nizan. With that, I'm going to, we have covered a lot of the ground today, and I'd like to open the floor for the questions or comments from the audience. I have received some questions raised by the participants today. The first one is cryptocurrency suitable for defined as a hedging assets or hedging tool? Because there are different views from academic or experts or other reports. So is it a hedging assets candidate? Anyone want to take this hard question? I mentioned earlier that in some countries like Argentina, the peso is in a very high inflation status. So you can see from the news that people in Argentina are paying in convenience store or in other stores, paying with virtual assets with USDT or USDC, and all the stores accept this kind of payment. This one kind of hedging the inflation, and the other one is hedging the foreign exchanges. As I mentioned earlier, some of the big companies in Taiwan or around the world are starting accepting their counterparts to pay their money with the stable coins, and you can speak the SWIFT or other foreign exchange control. So there are more and more companies thinking about that. But the traditional hedging assets, I'm not sure. Is there any other application in this regard from a portfolio of assets perspective? Anyone want to share on this topic?
Yeah, look, I'll have a go. Like for me, this is not financial advice, but look, obviously allocating to Bitcoin, you're reducing the risk associated with currency debasement. I think we've seen the performance there. Look, I think you've also got to really think through your risk tolerances, right? Whether you're an individual or an institution, right? How much appetite are you going to take? What's your spread, your portfolio? How much diversification do you want? And I think for people starting off, I really encourage you to, obviously not advice, but to have a play around. Look at the financial applications that are out there. Go onto the digital asset exchange, the licensed ones, and purchase at least a small fraction of a Bitcoin. And this is where you actually start learning how it works. And the same with, if I think of stable coins, as a useful mechanism. I look at our company and many that I advise, more than half the staff are paid now in stablecoins. And so that's obviously the staff have got familiar with how it works, and also what mechanisms they can use as a form of payment. So they can still go and pay their rent or pay their mortgages, etc. They've learned how they can still do that through various card and other options out there.
Thank you, Alexander. I recall that these 2 weeks are Taiwan weeks, right? The first day, there's a keynote speaker. He mentioned that in the past, we usually use the equities and bond as our major portfolios under our assets. But right now, maybe 25 to 30% is composed by the alternative investments. And one of the alternative investment tool is focused on the virtual assets. That's a major experience shared by an asset manager. So you want to add something, Kito?
Yeah, so yeah, I think virtual asset, digital asset can contribute to the diversification of risk. And further hedging, I think it depends on whether we can offer some options and also take the short position of virtual asset, for example. So yeah, it depends on how financial arrangement we can create in the market.
Thank you. And the second question raised from the audience that we are talking about stable coins, but different countries have different measures on the development of stable coin in other coins, digital coins, wholesale CBDC, or tokenized deposits. So how do we see different tools of these different kind of tokenized assets? Anyone want to take this? Still a very tough question.
I mean, I could say a few words. So I think sometimes there's confusion between 4 different types of I guess, products, which is CBDC, central bank digital currency, stable coins, tokenized deposits, which are essentially covered under most regulatory frameworks for deposits, and tokenized money market funds. And I think that a CBDC, which is often comparable to stablecoins in the eyes of many, is different because it's not, obviously it's not private entities or, private sector that is operating and managing, but rather the central bank. And this has, of course, advantages and disadvantages in people's respective opinions and views. And so an interesting experiment that was done actually in Israel with regard to the central bank digital currency. In the last year, they did a wide survey, and 51% of the surveyed individuals felt very comfortable and positive towards a CBDC being adopted in Israel. And when asked specifically about privacy concerns, which at least typically in many countries where this was surveyed, people expressed a lot of concerns. Oh, the government will know everything I buy and do, and can not only, will Big Brother know, but they can also, program the money, because that's part of the aspects of, using the blockchain technology, right, the programmability. In Israel, surprisingly enough, people did not express concerns about the privacy aspects. And I guess that's also very culturally based. So how much do you trust your government? How, impactful is the government's role in your day-to-day life? Do you, trust it more or less with your personal matters? So I think, in the US, for now, for example, it's no longer on the table. This current administration has stopped experimenting and exploration of that. In some European countries, there has been a concern about the privacy aspect as well, the programmability. But I think it really varies and is different between the different countries. One thing is for sure, whichever stable coins become or end up becoming the more widely used, of course, the currency that they're pegged to and the jurisdictional aspects will play a role, right? And so there's some geopolitical aspects to this sort of race as well, which need to be understood, whether it's CBDC or stable coins that are pegged to whatever currency we're dealing with.
Thank you. Carl, you want to add?
Yeah, it was interesting you were talking about the, again, stable coins, and this is a couple things. This is not new, right? I mean, so stable coins, whatever stable coin becomes the standard, right, will be more used, and that will be the one, again, that will win. Now, who gets lucky or who provides a service to make that standard? But it reminds me, I mean, when about 10, 15 years ago when China wanted to make the RMB an international currency, right? And it was international currency, stable coin, whatever it is, it's based on trust, it's based on knowing the value, right? And it's based on the ability to use it. And when we were doing this in China, you know, a lot of countries weren't going to put in their basket of currencies too much renminbi because they weren't sure about the renminbi and I was going to make it stable like the U.S. dollar, sort of thing like that, as a stable, and US there been there forever. But the other thing was we were working with companies, and I was at the bank and trying to do this, and the only way people would use RMB as their currency was when they had both sides of a transaction. So we had something like BMW. BMW says, well, I don't want RMB, I don't want to receive RMB. But then all of a sudden when they started selling enough cars and they had RMB, and they said, wait a minute, we have factories where you have to pay factory workers in RMB. When you have both sides of a transaction, then a currency becomes more usable. And that's almost the same thing that stable, you know, whatever stable coin wins or more commonly used, wherever you have both sides of a transaction, that's where it's going to become, you know, a standard.
Thank you, Carl. So the third question from the floor is that, is there insurance related to virtual assets now, or should they be covered by deposit insurance? Oh, that's a tricky one. In Taiwan, according to our draft proposal, there's no insurance comparing to traditional our deposit in banks. But it's an interesting question. Is there any other observation from other countries?
Yeah, look, I'll share, at least from what I've seen, having been exposed to, I guess, the digital asset insurance landscape in Australia, Hong Kong, and also UAE. Look, even at our exchange, Coinstash, we are looking at our insurance options. So we got, there are options in the market now. It's definitely matured in the last few years to get, you know, A-rated insurance that covers directors and officers, professional indemnity, but also vault custody insurance, and also cyber. But if you look at a market like Hong Kong, there's very clear rules for licensed platform operators or exchanges around the percentages they need to hold in hot and cold storage, and then the associated insurance. Looking at Abu Dhabi and what they've developed out of the ADGM, you're actually, if you want to have a license over there, as part of formally receiving your license, you need to have insurance, though it's not defined what level you need to cover cyber, vault, custody, director and officer coverage. So it's part of their rule book. You effectively can't pass the final clearance without it. So I think the insurance brokers are actively looking at how do they get more and more underwriters in the space. And I think the challenge for the sector has been there's been limited choice. So you don't want to have insurance that if you have an event, you don't actually have real coverage. There's unrated. So you really want to be looking at how do you find more and more A-rated insurers that are actually going to be able to pay out in the adverse event scenario.
Thank you, Alexander. I have a follow-up question. For those crypto assets, stable coins have 100% of reserve, either in bonds or other assets. So in some perspective, it is less risky similar to bank run or other situation, right? So because in traditional banking system, there were multiple effects for the traditional business. But for the stable coins, it's 100% reserve kept in other managed by other third party. So can we say that it's left necessary for the stablecoin to have insurance?
Look, maybe I'll just quickly jump in on that. I think we have had DPEG events, and also depends on the type of stablecoin. Even if you are fiat-backed stablecoin rather than a commodity-backed one, it depends on the structure. So the one-for-one liquid reserves, is it truly liquid? You know, what are they doing? Is it really cash equivalent backing? Or have they invested in 90 days or beyond treasuries? So I think it really depends on the reserve assets. For me personally, I like where I've seen like trust type models to try and prevent, to make sure that it is actually following the investment mandate, which is hopefully the one-for-one sort of liquid. The other point is, if you're looking in a number of markets, HKMA, so Hong Kong, what APRA through Department of Treasury in Australia have come out is they want the banking and insurance regulator, the prudential regulator, to actually have oversight around this. And I think that's for that risk that we do have that run scenario, which hopefully we don't. But I think every cycle we're going to have differing versions. We've seen it from fiat stablecoins to even the algorithmic stablecoins where things go wrong when the markets change.
Thank you. Nizan, you want to add something?
No, I agree with everything, and I just wanted to add that, you know, the issues of run and the redemptions are what, you know, prompts a lot of criticism to some extent with regards to the new regulation in the US as to, you know, Federal Deposit Insurance Corporation coverage, and I think some people would feel much more comfortable really seeing how it would play out, so that you're not going to, you know, give this, you know, insurance framework and umbrella without the actual, you know, compliance and auditing and, you know, goodwill to actually be part of the regulated banking, you know, larger system, so to speak.
Thank you, Nizan.
One quick comment. So yeah, as I previously explained, so in Japan, in addition to fiat-backed stablecoin, we also can have a algorithm-backed stablecoin. So we still don't have any use case of the algorithm-backed stablecoin, but insurance for that kind of error in the algorithm can be exist, I think, but haven't seen yet. So yeah, let's see. Yeah.
Thank you. I have seen a reminder there. So as we wrap up today's session, I'd like to thank all the panelists for sharing your insights on the trend of crypto assets. Our discussion has highlighted how dynamic and rapidly evolving the crypto assets landscape is. So thank you once again for joining us, and I hope today's session has inspired you to explore new perspectives on crypto assets. So have a good day. Thank you.